The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 27th magnificent Monday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools, well, just simply the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, truly, that's what it's all about. Hope everybody out there had a great weekend. Thanks for joining us this morning. Let's go take a look at one of our tools. This is the tool I call To Have More, You've Got to Become More Than You Are. Here's one of life's great axioms. You know, a self-evident truth that requires no proof, such as to have more than you've got, become more than you are. Think about it as you've grown throughout your life. To have more, you have always had to become more. What a great lesson to pass on to our kids, to pass on to our grandkids. And we get to see this play out on an ongoing, continuous basis. Sports is a great way. You know, the Olympics are just around the corner, and we can look at, well, you got this coming Sunday, you got Super Bowl, got the Super Bowl, right? So we can look at professional athletes as well. The great ones, the really great ones are always working on their game. And if it's true about sports, seems to me that it would be true for trading and investing in every other aspect of our life. To become more, to have more, we've just simply got to become more. Most everyone I come in contact with has a similar universal outcome when it comes to life. That being to become wealthier, to become happier. Doesn't matter what level one is playing at. People want to become wealthier and people want to become happier, and the two are interdependent. Yes, interdependent. The cool thing is that both of these outcomes are accomplished, though, with the same law of life, which is learn to work harder on yourself than you do on your job, what I like to refer to as personal development. Now, personal development is perhaps the most challenging assignment that each of us can undertake, but the good news is that it's an assignment that lasts a lifetime. You see, what you become is far more important than what you get out of life. Therefore, the important question to always ask is not, what am I getting? Instead, we should be asking, what am I becoming? Getting and becoming are like Siamese twins. What you become directly influences what you get. Think of it this way. Most of what we have today, we've attracted by becoming the person we are today. You see, income rarely exceeds personal development. Sometimes income takes a lucky jump, or maybe an unlucky, move to the downside. But unless you learn how to handle the responsibilities that come with it, it will usually shrink back to the amount that you can handle. If someone hands you $1 million, well, you'd better hurry up and become a millionaire. A very wise and rich man once said, if you took all the money in the world, divided it equally amongst everybody, it would soon be back in the same pockets it was before. Another one of great life's axioms, folks. Anyone who tells you differently simply believes they can change the laws of life. Here's the key. It's hard to keep that which has not been obtained through personal development. Always remember, to have more than we've got to become more than we are today. Well, let's go check out and see what the market's got for us and got in store for us, I should say, today. Right now, Dow futures are up 32 points. They're trading at 15,848. S&P futures up 5 points. They're trading at 1787. NASDAQ up 6 points, trading at 3538 and change. Russell 2000 up. King dollar up 4 ticks, trading at 80.58. Not a ton of movement in the currency market with the exception of that great British pound. It does not want to give up. It does not. It is just trying to break out of that long-term consolidation pattern. We'll take a look at that. Goldilocks back $2 right now. A flat market out there trading out at $12.62. Silver, hi-ho silver, up 7 pennies, trading at 19.84. Light sweet crude up 43 cents at 97.07. Natural gas, back 11 cents. It's had quite a movement here today. We'll already take a look at that. It's trading out at $5.06. A quick peek around the globe. Let's see what we've got out here. The DAX in Germany, it's trading down 17 points. Really a flat market, not too shabby out there. Something to think about. The FTSE, on the other hand, down 88 points, a little over 1% to the downside. In Asia last night, a sea of red. I do mean a sea of red. The Nikkei off 2.5%, down 385. The Hang Seng up 2%, down 473. The Shanghai off 22 points. It closed at 2127. Our call-in number is 877-927-6648. If you give me a call, I would be happy to take your call. We could take a look at your stock, answer whatever question you might have. Might be a question about technical analysis. Give me a call, folks. Let's take a look at the ES Mini. Let's start off by taking a look at the 120-minute chart. Oh, boy, mercy me. There was damage done on Friday. Big damage done. If we do take a look at the ES Mini, you're going to see a couple different things out here. Number one, if you are watching us on TigerTV, thanks so much for doing that. If you're listening on the radio or your mobile device at TFNN.mob, I'll describe to you what we're looking at. You can always catch the archive of this show on Channel 9. Of course, you can get the live stream by going to the homepage of TFNN.com. Upper right-hand side over there, you'll see a button with some smartphone devices. Click on it. The show will stream live to your device. You'll be taking a look at two black diagonal lines to the upside. That is your rising price channel. That rising price channel, that was broken through. And broken through with conviction, and price moved all the way down and has formed thus far a 0.786 Gartley buy pattern, which, by the way, it has been confirmed. So you've got a 0.786 Gartley buy pattern. Now, the cool thing about that, because if you have listened to the show before, if you're just new to listening, you're going to hear it now. And the beauty is that when you take a look at 0.786 Gartley buy or Gartley sell patterns, when they fail, they turn into butterflies. So if you are bearish at this moment, you are looking for this pattern to fail. When I say it confirmed, what do I mean? Well, what I do mean is at 8 o'clock last night, as the futures kicked in, the bulls showed up. They had to show up for work early because they were pummeled, right? They were pummeled on Friday. You know, if you want more, you've got to become more. You know, if you're professional, you got to work on your game. Well, the bulls, they're out early working on their game. They formed a hammer candle last night, was confirmed. This is a 120-minute chart that we're looking at. It was confirmed with a move higher out there. We've seen some bullish engulfing candles as well. We've seen some additional hammer candles. The bulls are out here defending this territory with vigor this morning. Not necessarily with volume, but they are out at work painting signs. You had a hammer come in at 8 o'clock last night. You had follow through on the next candle. You had a bullish engulfing come through at 4 o'clock this morning. That was able to fend off a move by the bears. You had a hammer that, quite frankly, took place at 6 o'clock this morning as the bears were trying to say, no, not so fast. But the bulls, they had something else to say. So what else have we seen out here? So you got a couple different patterns that are completing. Now, remember, I tell you that understanding the signs, the signs that the bulls and bears are making is really critical to every trading system out here. Here you've got the 0.786 Gartley, brought to us by H.M. Gartley, really popularized by Larry Pesavento out there. So there's one system that we're taking a look at. Let's take a look at the Chapman wave. You know, you count your peaks and troughs. In this case here, you would start with your time frame of 8 o'clock in the evening on January 22nd out here. If we start counting our troughs, I've got this beautiful tool here. We'll just count to the downside. It automatically counts in number sequence here. And as that hammer candle was being formed, guess what, folks? It was being formed with one of Basil's letter D's out there. So now and that also was forming a hammer candle. So we've got really three patterns, if you will, that are forming out here in the ES Mini as they were hitting that price of 1776.25 out there. That is an important low. As I say, if the bears are able to show up for work and they storm through the doors and they're able to get it closed below that level, this pattern is very likely going to turn into a butterfly pattern. And I know you are asking, well, where could price travel to? If it breaks through those lows, 1754 is going to be your next stop. That's your 100% move of a move. That takes you all the way out to the level at about midnight on December 16th. But more likely what we will look at is a move down to about the 1728 to 1696. Both of those, 1728 is your 1.272 expansion, 1.618 is your 1696 level. We can also see that third pattern out here that was forming was where the market was extremely oversold. It was in the 17.5 level of the RSI 14 relative strength index. In this case here, the relative weakness index gets down to a super low level. No price divergence out here inside the. So that was not a pattern that is existing right now in the 120-minute chart. So we'll see. What I do expect is as the doors open, as the shoppers, in this case here, folks, the bulls that want to return, they want to turn in their goods. We will see the market move lower and try and test the will of the bulls, which is in the 1776.25. Doesn't have to move all the way down to that level, but that is the area that we want to be paying attention to. Now, that is in the S&P 500. If we go take a look at the Dow has been the weak hands. Well, guess what? The Dow also forming a 0.786 Gartley buy pattern. The bulls were not as enthused when it came to the Dow futures. You did have a little bit of a hammer candle that showed up at about 2200 hours. So what is that, 10 p.m.? 10 p.m. Although that hammer candle is so small that you got to be really paying attention, in my opinion, to the S&P 500. Nonetheless, if we do take a look at the Dow futures, if this pattern here fails, that too will turn into a butterfly pattern. The first stop, though, is that 100% move, getting back to the December 15th lows at 15,678 out there. Let's go check in on the NQ. Let's go see what it is doing on its chart. It, too, forming a 0.786 Gartley buy pattern. It doing it, in this case here, with a hammer candle. It also doing it one of Basil's trough Ds. So we've got multiple patterns that we're setting up here. That says inside the NQ, very key session today, 3520.25 is the level you're watching to either be supported or be breached. Just simply depends on what side of the market you're on. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not a lot of change in the futures market. One thing I didn't mention, and I certainly should, if we take a look at the breakout session that occurred inside of the Dow futures, that was on December 18th. That was that big Uncle Ben Bernanke day out there. We had quite a swing out there in that 1-2 hour session. Went from Dow futures going from a low of 15,749 up to 16,114 out there. That was a big move, folks, and did it with some big volume, 105,000 contracts out there, as the Dow futures were moving back on Friday into that level. All that they could muster up was 79,000 contracts out there. Now, we haven't seen the lows tested. Pretty close, though, which was that 15,749 level. Overnight trading, the Dow futures got down to 15,744 versus, what did I say, 740. I take that back. It did get tested. It most certainly did get tested, certainly on lighter volume, just simply because of trading out there. So, it's very simple. The numbers here are really set for us with regard to the Gartley buy patterns that are out there, with regard to the pattern signals, the candle signals that are formed out there. So it becomes pretty easy today to, whichever side of the market you are on, becomes pretty easy to understand what the markets are likely to do at certain levels out here. Let's go take a look and see what's going on inside of Goldilocks out here. Gold trading back $3 right now. Now, gold here is really doing what it is supposed to do, and that is this. On Friday, it broke out above. Now, if you're watching this on TigerTV, you're going to see really 2 trend lines. You're going to see the channel line. That happens to be the red line on my screen. And then just up above it is the actual trend. The difference there is the channel lines are using a bodies candle, an open or a close, and a trend line is using the extreme emotion of the candle signal. It's using the high out there. And if you take a look at the blue line, you can see both the blue and the red line out there. But right now we're taking a look at the trend line. And the trend line is perhaps more often used by traders out there. And if we do take a look at Goldilocks on Friday, was able to punch through that level. Now, when you break a trend line, doesn't matter whether it's horizontal or diagonal. In this case here, it's a descending price trend, so it would be a diagonal line. You can see that price has come back and it's tested it. Now, the key here is that gold really needs to stay above that trend line to test it, throughout the day and close. Why do I say that, by the way? Because if you can't break a trend, now this is a trend that's been in place for quite some time, price can always go back down to the bottom bottom of that trend out there. So the most bullish thing that we could see here, whether it's today, tomorrow, however long it takes, is a testing of this trend line and then a move higher to complete the 1-to-1, 1.272, 1.618, which is more likely what I think will take place with Goldilocks, heading up to about the 1361 level. So it's traded at 1261 thus far here, not a problem. If we take a look at silver, high-o silver, just sitting on its saddle. It's been sitting on its saddle here for quite some time. It's been sitting on, and that's another, isn't that a nice way of saying it, right? Maybe next time you're speaking to somebody because they're not doing what you want to do, tell them to get off their saddle out there instead of something else. Well, in the case of silver, it's been on its saddle here since about November 19th, traveling in a $2.30 point sideways consolidation move out here. So it is not doing a lot. Maybe just simply winding up the rubber band out here, trying to take off. Maybe it's just wanting to see what gold will do out here, just waiting for gold to just simply confirm its move. I mentioned natural gas has had quite a move here already today. Let's go check in on that. Made a high thus far of $5.44 out here. Right now it's trading at $5.08, so you can see well off of its session highs out here. Nonetheless, it's made the 1-to-1.272A to B equals CD. It does look like this wants to travel up to about 573 as its next stop out there. Bonds, let's go see what's going on in the 30-year Treasury here right now. Not a ton of movement here. A little bit higher intra-session, but at this stage, just because the candle's red, that doesn't mean that it's bearish, folks. Bonds here making the 1-to-1, completing the 1-to-1 A to B equals CD up, and that's in the 132 range out here. Does look like bonds want to travel higher. Most likely, let's see, did they actually test the swing point? No, they have not tested the swing point high yet. And that's from October 30th of 2013. The low there, 133.1 out there. The light sweet crude. Let's go check on light sweet crude here before we go to break. Light sweet crude just traveling sideways. Looks like an inside day thus far out here. So maybe this is just really now setting up its next A to B equals CD down, as it has really backed off the gas, so to speak, as it's made the 0.618 retracement. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 16 points, trading out at 15,895. S&P up 1, trading at 1791. Composite up 1. Russell up 1. Seems like a day of ones out here, with the exception of Apple. It's up $7. Now, Apple, I believe, is out with earnings after the bell. So at 4:30, we should see some fireworks. Right now, trading at 553. You know, look, a 10% move in Apple is about $50. So you could see easily a move in Apple anywhere between $0 and $50 today after 4 o'clock out there, you know, somewhere in that range. Microsoft down 15 cents right now. Google off $2, trading at 11/21.66. Leading the charge, the upside is Apple. Just behind them, Caterpillar out with earnings here this morning. CAT. Their ticker symbol. They did revenues of $711 million versus $679. Pretty impressive there. Operating profit $1.4 billion versus $1 billion. So beating top line, beating bottom line as well. You've got Signet Jewelers, SIG is the ticker symbol. They're up 5% here this morning. I don't see any earnings release there, trading up 387. You've got Live Deal, LIVE is the ticker symbol. They're up 20% here this morning. There, I'm not getting my news data feed, or I don't see anything behind that move. There ought to be something behind that 19% move. Rayonier, RYN is the ticker symbol. Probably totally blew the name of that company, but nonetheless, it is what it is. It's up 7%, up $3 here. Sirona Dental Systems, SIRO, is a ticker symbol. They're up 4.5%, up $3. Amazon up $3.71. We take a look at Stratasys, SSYS. It is leading the charge here to the downside off $3 and change. 3D Systems not far behind them. Actually, dollar-wise, they're off $4.50. $4.50 here. They just jumped in the lead. Mercado Libre, MELI, off 3% this morning, down $3. Google now down $3.80. Twitter off $1.90. Celgene down $2.40. Apache Corp off $1.45. Sarepta Therapeutics back 6% this morning, off $1.50 out there. If we do take a look at the currency market, let's go check in. Very impressive. Very, very, Very impressive, this Great British Pound. It does not want to give up. Now, this is a weekly chart that we're looking at, and it has attempted here. It is attempted now for really since December 20th. You know, we're going to give it a little bit of time off during the week of Christmas out here. But it has been attempting to, it keeps testing the top of its horizontal consolidation area out here. So that black line going across my screen, that is a stiff area of resistance. And again, this week here, a close above 1.6457. And that likely sets up a huge move inside of the Great British Pound. That likely sets up a move to 182.34. Look, it has a little bit of chop. It's got a little bit of resistance to also get through. For example, the August 7, 2009 level, which is 170.04. But, you know, with this type of work that it's doing to bust through the consolidation, I suspect if it can do that, it'll go ahead and make that run to the 182 level. That'll put a little bit of weakness in the U.S. dollar index. Of course, that is not the largest weighting with inside the U.S. dollar index. That goes to the queen, as it should be in life. And the queen here, the euro U.S. dollar, as you know, this thing has been traveling in a very narrow cone, a cone of silence out here. You can see that last week it hit the top of that cone. That happens to be the descending price channel. That's the red diagonal line going across my screen. This is a weekly chart also that we're looking at that takes you back into the 2008 time frame. You can see that level here as acting as resistance. You know, it says that we ought to see the euro move back down now to the bottom of the rising price channel. That marks the bottom of the cone that price is traveling in. I do not know which way this is going to break, but it's been traveling with inside this cone. You talk about this has been a pattern that's been in place since October 25th, 2013. So it's been, well, you could actually make the case. Really, this is the case. This is the case I'm going to make, and that says that it's been traveling in essence with inside this cone since July 19th, 2013 out here. So this says that we ought to see a move to the downside inside of the euro. It is too narrow, in my opinion, to play other than being on some ultra short-term charts out there. And that is in the euro U.S. dollar. Let's go check out some of the other currency pairs out here. Let's not just leave it to the pound and the queen. Let's go take a look at the U.S. dollar Japanese yen as soon as I can find that on my screen. It's got to be right here in front of me. And, of course, it is not. Why is that? How could that possibly be? That is, so let me just put that chart up on my screen. No need to worry about it. USD, as soon as I can learn how to type here, USD/JPY, plus sign, and we'll be all set here. Now let's go see what the U.S. dollar Japanese yen is doing right now. Traveling out at 102.70 out here. And I see I've got a previous chart here marked up for a client who was trading this pair. Well, actually, if you're watching this on TigerTV, you can see how this broke through a trend line. It did it on the trading session of November 13th, but that's not what we're talking about. Let's take a look at the A to B equals CD pattern. Let's clean this chart up here. So this has formed an A to B equals CD. That says that's a Gartley buy pattern out here. Give me a moment here. The A point on this that you would use, I would just go ahead and use the high of January 2nd, 2014. That's at 105.43. Your B point happens to be the low on January 13th. Makes a run up to the high out here on January 16th out at 104.91. It's made the 1 to 1.272 A to B equals CD. No bullish candle, no bullish reversal candle here just yet. So it is possible, it is very possible that the U.S. dollar Japanese yen could continue to run lower, but it has at least completed the A to B equals C. It's formed. It hasn't completed. Let's call the completion when we see a bullish signal show up here. So it has formed an A to B equals CD. It just has not completed that pattern here just yet. Now, if we take a look at retracements off of lows to high, here I would use the swing point where you saw a significant change in trend inside the U.S. dollar Japanese yen. That'll take you back to the level of October 8th, and that's out at 96.55. If you go from that low to the high of 105.43, that's a that's the high that we use for our A to B equals CD down on January 2nd out here. You can see that it's also just made a 0.382 retracement. So this would be powerful. If we can see a reversal today, a bullish candle, bullish engulfing candle, that would be a nice one. That would be a close above 103.28. You're at 102.76. You get a close above 103. What did I say? 103.28 today, and that could set up one heck of a nice buy out there because only a 0.382 retracement. That would say the next leg up would be very significant out here. Now, that's what the daily chart is showing. If we switch over and we take a look at the week, I can't recall if it's the weekly or the monthly chart. If we take a look at the, I think it's the week. Well, it's really on both charts out here. In fact, let's take a look at the monthly chart. Let's take a look at the retracements here. As soon as I can find my fib levels tool, we go from the high out here in 2007, June of 2007, down to the lows that were put in October of 2011. What did I say? I said June of 2007 to the lows out here in October of 2011. You can see it's made the 0.618 retracement. 105.57 was the number. That's where you would expect to actually see the people get off of the elevator because you got to admit it was one heck of a run out there. But really, this could easily be setting up an A to B equals C to up. All that it needs to do is get above the 105.57 level, and it'll go up to the next level, which is 113.73. But if it clears, if and when it clears the 0.618 retracement level, it'll do much more than moving up to the 113. It'll go ahead and make a run all the way to the highs out here from June of 2007 out at 124.13. So we got the Dow is up 51 points right now. S&P is up 5. Composites up 370. Let's go check in on the ETFs out here and see what they're doing. And we'll take a look at some of the sectors. Let's take a look at the Qs. Let's start off by taking a look at the Qs. We should see some fireworks out here today with Apple. It is... can't recall if it's number one weighting inside of the Qs or not off the top of my head. I don't have an easy way to do that here during this next 6 minutes, so I won't do it. But if we take a look at the Qs, moving down, big volume off of the highs here on Friday, 64 million shares. Thus far, you're really just trading up just slightly. You're at 86.77. You closed out at 674, so really not a ton of movement inside of the Qs as we speak right now. Where could this run to? That is a good question. Well, certainly it could run all the way back up to its highs. If you just take a look at normal retracement levels from that high on January 22nd down to today's low, because today we made just a slightly lower low out here. Your 0.382 retracement is 87.50. That would be a likely target. That would be nothing for the Qs to make a move up to 87.50. 88.08 would be the beginning of Friday's downtrend, a downdraft out there. So that would actually be a more logical spot for the Qs to make a run. Right now they're trading out at 86.80 out here. Even with this move higher here, in my opinion, not until we see the ES Mini close above the 1793 area, and ES Mini right now is trading about 1790. That'll be your signal at 1793 that the bulls, as they were out early this morning, making all those signs last night, hammer candles, bullish engulfings, that they actually will have succeeded in defending the lows for the moment. And I do mean at this stage right now for the moment. If we take a look at the IWM, the Russell 2000, it's trading out at 113.60. It was down with volume after forming its third three-drive to a top pattern out. Well, its second three-drive to a top pattern. That one looks to be the one that has worked here. 57 million shares to the downside. That was on Friday. So far, just an inside day out here. You have not tested the lows. Where is it that the IWM could bounce to? Really the same kind of moves that you can apply to all of the ETFs, all of the indexes. Most likely what you would see out here is a move to about the 115.78. That would be the top. That would be about the high of Friday's session. The actual high of Friday's session was 115.74. How do you like those retracements, how they work, and bring you right there? And that's where the downdraft began. And that's what I would expect to see the IWM move up to if we can get some real energy here behind this move. Well, I say energy, price energy, not necessarily volume energy, but we'll see whatever the day brings. It will bring out here. We do have also the FOMC. I believe they begin their meetings tomorrow, so it is Uncle Ben's last FOMC meeting, and maybe they just simply want to send him out on top out there. Let's take a look here at some of the stocks that are moving and grooving. Let's go take a look at Apple. Let's go see what's behind the move here in Apple, trading up $6 and change right now. It is trading out at 552. This has managed to hold it, pierced that 50-day exponential moving average. That's the blue line going across my screen. Pierced it for 2 days, January 9th and January 10th out here. So far, not really a ton of action, even though it's the leader in the clubhouse out here. Volume-wise so far today, 1.9 million shares. Now, it was not really too shabby on its move down on Friday out here. Only 15 million shares to the downside. Last time we had a move to the downside was 15 million on January 17th out here. You had another move with about 14 million on January 3rd. So really Apple was not folding so much on Friday. Maybe that's a piece of information that you ought to stick in your feather out there. Something to think about. So after Apple completed its 1-to-1 A to B equals CD on the way up, all that we've really seen here is just a sideways consolidation move. So that kind of gives us a range out here of what we could expect today with regard to Apple's earnings. So if we take a look at that consolidation range, the low of which is 529. The high of which is 575, so 530, 575. Looks to me like what we would get is about a 35-point move here after Apple reports its earnings. Now, it may just stay inside this consolidation box, may bust out, but about a 35-point movement would seem about logical. The range that it's been traveling within. Let's go take a look at IBM. Let's go see what IBM is doing this morning. It's trading just a tad lower. This is the daily chart that we're looking at on our screen. This is the 0.786 Gartley sell pattern. As you know, any Gartley pattern has got 5 potential outcomes to the trade. If we take a look at this one, it has achieved outcome number 1, numero uno out here, as it made the 0.618 retracement. It did that on Friday, and it did it with volume that was just so-so. Only 6.6 million or 6.9 million shares to the downside out here. So not too shabby. It had more volume to the downside on the trading session of January 22nd when it did 13 million shares. So not a ton of conviction out here. Of course, it is trading just slightly below the 0.618 retracement of 179.54. Says that, most certainly the next level, the second outcome, will be your 0.786 area. Well, folks, if it tests the 0.786 level, that is where it will release some information, because October 17th is that big downdraft session, the high of which is 177, and you got 176.47 is your 0.786 level out there. A close inside 177. That's got, by the way, 22 million shares. Says that you should see a test of the lows in the 172.57-ish range. Right now, the Dow is up 38 points. How about that? The Dow, with a weak link out there, is the leader in the clubhouse percentage-wise, up 0.25%. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great
long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 37. The S&P is up 2. So the leaders in the clubhouse here this morning, you've got the Dow's up 0.25%. The New York Stock Exchange is up about just over 0.1% here. We do have right now some net advancing issues, not overwhelmingly, about 100 out here. Let's check in on ExxonMobil. Now, ExxonMobil had been traveling in a 7-point consolidation range, busted through that with conviction, really made its move, completed its move to the upside, which was in that $100 area, got up to a high of 101.55 on December 30th out there. Now it's coming back and looks like it wants to test the consolidation level one more time. On the way back on Friday, did it with 14 million shares. The last swing point down here has got only 9 million shares for December the 2nd. You'd like to see it come back into that level, somewhere between 92.92, 94.04. You'd really like to see it come in and test that with less than 9 million shares, and then see some kind of bullish reversal signal inside of ExxonMobil. As far as A to B equals CD down patterns here, if you go from the high on December 27th, that's your level of 101.74 price-wise. The B point of this A to B equals CD down, that took place on January 13th, that low 98.27, all the way up to that little doji candle that formed on January 17th, the high 100.34, 1 to 1.27, 1 to 1.618 is actually what has formed here thus far this morning. That price point objective 94.70. We've seen a low of 94.75 as we speak here right now. That move down amongst all these A to B equals CD patterns in the marketplace is just saying that, it looks like a bounce to come and further move to the downside is on the radar out there. At least that's what the weather forecast looks like. And ExxonMobil, just another stock that really is confirming that. Let's take a look at a couple of stocks here. Maybe just enough time here for one or two. Let's go take a look at Caterpillar. Let's go see what Caterpillar is doing. It's up nice, 6%. Let's see if there's any volume behind the move here this morning. Caterpillar, gapping up and outside of its consolidation box out here. Let's see here. Give me a moment. So, Caterpillar up today with good volume. 6 million shares. It was down on Friday with 8 million shares. So this has got some nice action behind it. It's trying to take on a B point of a potential A to B equals CD up. That would be the trading session from January 15th. Only 10 million shares there. That says that 93.20 ought to be tested and tagged. You're trading inside that swing point with volume as we speak. If in fact Caterpillar can take it out, and take it out meaning close above that high, do it with volume, that actually sets up an A to B equals CD inside a Caterpillar that ought to take it to the 97.21, more likely 100.30, where it'll be testing that little island reversal candle formation on February 1st, 2013. How about that? I didn't never notice that island reversal inside of Caterpillar. Let me make sure. Yeah, that's a beauty. That is a beauty indeed. That took place on February 1st. If you want to study island reversal patterns, here's a beauty. On January 31st, 2013, the inter-session high was 98.71. The very low of the next day was 98.95, so you got a gap in there. And then it gaps down the following session on February 4th. The high is 97.91 again versus a low of 98.95. That set up your island reversal, your island top reversal, and that sent price all the way back down to the bottom of this consolidation range out there. So today, though, looking pretty good here for Caterpillar. Has not taken out its highs, but it's got some nice volume behind its move. Folks, if you are off to start your Monday, have a marvelous Monday. Thanks so much for joining us. Hope you had a great weekend out there. Be safe. Stay bundled up and warm as that Arctic freeze, does its thing, including, messing with us here in Florida. Have a great Monday, folks. Look forward to seeing you soon. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.